Good morning, everybody. I hope you're well. All had a good weekend and are now looking forward to the week ahead. If we go to the markets and have a look what happened last week, we saw the Dow up 0.2%, the Nasdaq was up 2.3%, the FTSE fell just over 1%. We saw some pretty significant falls in Asia, with the Nikkei down 2.7%, Shanghai down 2.1%, and the DAX in Germany down 2.9%. Now, those three markets, the last three I mentioned, have probably been the most volatile this year, seeing the biggest movements. And as I mentioned in last week's brief, although we'd had a pretty steady time in the summer, September and October are historically the most volatile months in the markets. And already it seems that that theme is playing out again, because we had a lot more volatile week than we'd had previously for some time. Despite the Dow finishing only up 0.2%, during the course of the week we saw it go from just over 18,000 to 18,350. So there was volatility there still. The bundle of four would have made you 1.8% last week. But again, I'll move on to and chat about technology a little bit later on. On the currency side, we saw the dollar continuing to improve. We saw it go from 112 to 111 against the euro. We saw it increase significantly against the pound. More like a pound fell. The pound was 130 at the end of the week, down from 133. The US dollar, Aussie dollar, 76 cents to 75 cents, and we had the Japanese yen fairly steady at 102, albeit that remains a far stronger yen than the Japanese want. So we've got a strong yen and a strong US dollar, basically. I think both countries could do with that coming down a bit. The reason why we saw the fairly significant fall in the sterling was due to thinking that Mark Carney was going to cut UK interest rates again in November. Again, I don't buy into this. The fundamentals of the UK economy are not too bad. We had some pretty robust employment data out, and it looks like the post-Brexit things are not going to be quite as bad as they were. Of course, you're going to have currency speculators going on the back of rate rises, rate falls, so on and so forth, and make a few quid here and there, or lose a few dollars here and there. But I think longer term play, owning sterling, is a good place to be. Especially if we get a Trump winning the election, which I think will cause the US dollar to fall a little bit. Then, of course, perhaps the Japanese yen, but certainly the pound may be a safe haven for your currency for that period of time. The US dollar is strong and remains strong, and I'm not sure how sustainable that is at this level. Albeit, of course, you have to have good dollars. Sorry, of course, you have to have some US dollars. So yeah, just to go to themes. I mean, to talk about sort of two companies last week and two issues that happened. Deutsche Bank, as probably a lot of you have read about, had a significant fall last week. The stock was down 12.4% in the week, which dragged some of the other financials down with it. The reason for this is that it's potentially going to be fined $14 billion for mortgage mis-selling. Now, incidentally, that was approximately the same amount of the fine that Apple were threatened with a couple of weeks ago, having been found, or wasn't a fine, but it was back tax, having been found to be using Ireland in an incorrect manner in respect to their domicile and income tax and that type of thing. The share price of Apple didn't move when they were issued with that possibly $13-14 billion charge. The share price of Deutsche Bank fell considerably. Yeah, I do, and I appreciate obviously that one's a lot larger than the other. And just to give you some scope on this, Apple is 38 times larger than Deutsche Bank right now. So you're talking a huge difference in the size of the companies, and obviously, of course, that means that the Apple can eat up that charge a lot easier than someone like Deutsche Bank can. But at the same time, I just think it's just the pulling power of these companies, and no one in Apple sort of took it seriously. $14 billion was not a small amount of money to Apple, but ultimately they knew that they could probably appeal, and it will take years and everything else, whereas there's not quite as much power held by the likes of Deutsche Bank. Another stock I want to talk about very quickly, and I know I'm going to go over today, is Amazon. And I posted something on LinkedIn just now, which is 10 reasons why you should buy Amazon. There's a lot of analysts out there talking about it being $1,000 share soon, which is great news. We saw the share up last week 2.4%, outdoing the Nasdaq in general. And one of the reasons in this article is that these days 44% of the US lives within 20 miles of an Amazon fulfillment network. That's incredible, and it goes to show where they've got it. How they can grow their business. And another factor that was mentioned on this reasons why you should buy Amazon is that, and this is what I believe in, as a lot is that the hardest thing in the world sometimes, is to sell a share when it goes down, but also when a share's priced highly, no one wants to buy. But if it's quality, then it's still worth buying. I mean, Amazon is a great example of this. Over the last 10 years, you'd have made 2,400% on your money. So you may feel it's coming off a bit, but it's not about the stock price, it's about the company. And if you get a chance to read those other factors that I shared on LinkedIn about why Amazon is a must-buy, then please take the time to do that. So I'm going to be very quick on the sporting fronts, not least because my team, West Ham, have had a dreadful start to the season, and let's just hope that improves pretty sharpish. Manchester City were fantastic again. Pep Guardiola, wonderful addition to the Premiership, and the sports that interest me by now, the ones that listen regularly: football, boxing. Fair play to Liam Smith, who had a good go against Canelo Alvarez in the boxing in the States. But at the same time, it's just shown here that 2 weeks in a row we've had two good British fighters go up against the ultra elite, and unfortunately just fell that short. But fair play to those guys, the bravest athletes on the planet, in my opinion. So to finish with, we're going to do a quote as always, and this time it comes from George Soros, controversial guy, clearly knows how to make money, albeit I don't necessarily follow a lot of his philosophies when it coongcomes to scaremongering and bubbles and everything else. But one of his comments, which rings true throughout the whole industry, is the hardest thing to judge is at what level of risk is safe. There we go. That's why you need all the input you can, people to help you out. Speak to the likes of myself, other investment advisors. Get an idea, and then, work within your risk parameters that you're comfortable with. But of course, you do need to take a bit of risk to make money. I think everyone knows that. Anyway, I'm well over 2.5 minutes, so hope I haven't bored you. Enjoy your week. Cheers. Bye.